Hey everyone, welcome back for another deep dive. You know how we do it around here. We love to dig into smart investing ideas. And today we're tackling a blog post by Arrow of Performance. Really interesting stuff, actually. They break down this idea that's like a golden rule for successful investing.
Yeah, it's funny how some of the most powerful advice is also the simplest.
Right, so get this. The whole thing centers around this quote: selling your winners and holding your losers is like cutting the flowers and watering the weeds.
I love that.
And it's not just some random saying either. It's attributed to Peter Lynch. The Peter Lynch.
Talk about investing legends,
Seriously. And then to top it off, Warren Buffett, he actually quotes this line in one of his shareholder letters.
which tells you something, right? If it's good enough for Warren Buffett.
Got to be good for us, right? But okay,
Mhm.
enough name dropping. Let's get into the meat of it. Why is this quote so important? Like, why do we as humans constantly fall into this trap of, you know, holding on to those losing stocks?
It's painful to admit we're wrong.
Ugh, tell me about it.
Nobody likes to look at their portfolio and see a sea of red. It's way easier to just hold on, hoping things will magically turn around.
Oh yeah, that whole "it's got to go back up eventually" mentality.
Exactly. We get emotionally attached to our investments, even when logic tells us otherwise.
It's like we're throwing good money after bad.
And then there's the flip side, the fear of selling a winner too soon.
Oh yeah, that's a big one.
It's like we're hardwired to avoid regret. So even if a stock is doing well, we hesitate to sell, thinking, what if it keeps going up and I miss out?
Classic FOMO.
Exactly. And the funny thing is, this blog author, they actually admit to making this very mistake themselves.
See, that's what I love about this post. It's relatable. They're not pretending to be some investing genius who has it all figured out. They're open about their struggles, which makes their insights even more powerful, don't you think?
Absolutely. It's refreshing to hear someone be so honest about their journey, Makes you realize we're all just figuring it out as we go, right?
Totally.
Mm-hmm.
And this author, they really took that to heart. They went from chasing those quick wins, always thinking short term, to really embracing that long-term investor mindset.
That shift from trader to investor, that's huge.
Yeah, and the blog post really digs into that difference. Like, it's not just about buying and selling. It's about owning a piece of something you believe in long term.
Exactly. It's about tuning out the noise and focusing on the fundamentals.
Which reminds me of that part where the author talks about selling some of those big name stocks. Amazon, Apple,
Yeah.
even Disney. Can you imagine having that kind of regret?
Oh, I think we've all got a few what ifs in our investing past, right?
For sure. But it just goes to show even the smartest investors make mistakes. But here's where things get really interesting. The author eventually embraces a more concentrated portfolio, which, goes against that whole "don't put all your eggs in one basket" thing.
Right. And it's not necessarily the right approach for everyone.
So break it down for us. When does concentration make sense?
Well, when you've done your research, you really understand a company and you truly believe in its potential. That's when focusing your investment can lead to those outsized returns.
But it also comes with higher risk.
That's a trade-off, for sure. But it's not about gambling blindly. It's about conviction in your research.
Okay, so not exactly a beginner strategy.
Probably not. The author even says that for most people, especially those who aren't actively managing their investments, diversification is still the way to go.
It's about finding what works for you, your risk tolerance, your investing goals.
And that's something this author really emphasizes, the importance of continuous learning.
Yeah, they're all about reading, researching, constantly evolving their approach. They even admit that what worked for them a few years ago might not be the best strategy today.
And that's the thing about investing, isn't it? The markets are constantly changing. There's always something new to learn.
You always hear that, right? The more you learn, the more you realize you don't know.
It's true, though, and it keeps things interesting.
That's for sure. But you know what else this blog post made me think about? We've been talking about this whole cutting your losses, letting your winners run thing, which is great advice. But how do you actually do that? Like, how do you pick the winners in the first place?
The million-dollar question.
Right. It's one thing to talk about letting your winners bloom, but how do you pick the right seeds?
No easy answers there, unfortunately. But I think this blog post does a great job of highlighting the importance of mindset.
So it's not just about finding hot stock tips.
Right. It's bigger than that. It's about shifting from that, fear-based short-term approach to something that's more about knowledge and patience, a long-term vision for your investments.
So less about trying to time the market, more about really understanding what you're investing in.
Exactly. And being comfortable with some level of risk, because let's be real, every investment has its risks.
So true. Well, I think we've given our listeners a lot to chew on today.
Uh-huh.
What you say we wrap things up as a little challenge?
I like it. Hit us with it.
Okay, so we've talked about those weeds in our portfolios, those stocks we might be holding on to out of stubbornness or fear. But what about the potential flowers? What's one company out there that you think has what it takes to be a real winner down the line? It could be one you've had your eye on for a while. Maybe it's a bit of an underdog. Whatever it is, do your research, and who knows, you might just unearth your next big investment opportunity. Until next time, everyone happy investing.